Well, it's the first week of January 2025. The markets are really hotly anticipating any moves from Donald Trump in terms of introducing extra tariffs. So it could be a very volatile start to the year. I'm obviously making this video in 2024, so some of those tariffs may even be in place now as we speak. So what we're looking for this week, I've got some key data points. There are more than those that are just listed, but I'm listing the top 3 events, and I'm excited about this week because there's some big potential movers for the US labour market. Non-farm payrolls is going to be very important this month, and we'll start with a reminder of while we look at high probability calendar events. We had a very successful 2024 with these risk events, with some great opportunities, and I'm feeling very optimistic for 2025 that we're going to see the same again. So I hope you have a really good year trading these risk events, and look forward to catching up with you in the live risk event webinars in 2025. So why do we look at calendar events? Because with it we can spot high probability trading opportunities. This morning was a good example with the UK GDP print coming out at 7 a.m. on the 13th of December. You can see that markets were surprised with below consensus print, below the majority of the readings: manufacturing output, industrial output, and of course the important GDP estimate. Now, next week the Bank of England are meeting, and markets have been waiting now for some time for the Bank of England to communicate sequential interest rate cuts. This is just the sort of data that gets markets anticipating that potential move. Now, the only fly in the ointment is the UK GDP 3-month data. You can see it came in at 0.1% as expected, but with the others missing below markets minimum expectations, the services month on month in line with the low, that was enough to give a clear short-term trading opportunity out of that GDP print. And we can see that we were looking for pound dollar shorts, and you can see the pound dollar has moved firmly and sharply down to that daily pivot point, which would be an obvious target for sellers depending on where you got in. That was a short-term opportunity, and there's potential probably for more given the weakness in the pound and the strength in the dollar likely to develop during the course of the day. That's why we look at these trading opportunities on the calendar, because every now and then, a few times a month, you get these clear scalpable opportunities. As we come to the first week of 2025, there's a few events to look out for. The first one is the Swiss CPI print. There has been increasing talk that the Swiss National Bank is prepared to move towards negative interest rates. Although not keen on it, if we saw a lower than expected inflation print, then that could open up the conversation once again for negative interest rates for the SNB. That should weigh on the Swiss franc. So that's what we'll be looking for on Monday, January the 6th. A lower than expected CPI print for Switzerland should see some downside in the Swiss franc. We'd look to pair it with a stronger currency at the time. On Wednesday, it's all about the labour market. Of course, the Federal Reserve, if they see a significant weakening in the labour market, they'll be more likely to signal a deeper series of rate cuts ahead for 2025. So although ADP, it's not necessarily a big market mover because of the sensitivity to US labour data at the moment, any significant surprises here should give us an opportunity in the dollar. It's certainly not one to miss. That follows up on Friday with the non-farm payroll. Of course, it's the showstopper, and it's arguably the most important data point in the entire world, how the US labour market is doing. And a big slowdown in the US labour market will have recession fears come back on the table, and we could see some significant volatility. You'd expect a big drop in the dollar if we did see a larger than expected miss on the non-farm payroll print. And also with the CAD labour data released at the same time, the Bank of Canada, they are in a cutting bias. But if we saw very strong US labour data and very weak Canadian labour data, that could give us a great opportunity in the dollar CAD. So those 3 risk events are really solid ones, definitely to look for potential significant opportunities in the forex markets on the first week of 2025. These are the ones that I'll be looking for, the top 3 events for that week. Take care and see you soon.